Welcome to Leaders. I'm Penny Crosman, technology editor at American Banker. Fraud instances have been growing every year, and the amount that banks spend on fraud has been rising every year. At the same time, in a recent survey American Banker conducted, 61% of bankers said they're not confident in their company's ability to combat fraud. We are here with an expert panel. We have Jay Leal, who is Chief Information Officer at Vantage Bank in San Antonio, Texas. It's got about $5 billion of assets. With Chris Briggs, who is Chief Product Officer at Mitek, which is a company that provides document capture for check capture, for capturing identity documents and software around that. And we have Gasan Awad, who is Enterprise Fraud Product Management Head at PNC Bank in Pittsburgh. So thank you all for joining us. Gasan is also a fraud junkie, self-described. So let's start with this. What are the three types of fraud or scams that you are all seeing most or most worried about or are causing the most damage, whichever seems most important to you? Let's start with you, Gasan.
Great question. I think when I think of what's pressing today, first-party fraud, or what you would call where the actual consumers involved, citizen fraud, you may hear about it, I think is a challenge not only at account opening when they're starting to come in through the front door, but also when they're in your, bank or institution because of things around dispute, chargebacks, abuse, transactional fraud. So something that we're trying to continuously battling. The other thing that I would say, it's hard to believe we've been talking about the death of checks. Checks are still challenging the industry. If you look at some of the stats year over year, check fraud losses are up. Still something we're looking at and trying to battle. And then I do think scams, and I say scams across the board. Employment scams, romance scams, charity scams, pig butchering. You could list everything there. And I think the challenge there, it's a human nature problem because people are actually taking advantage of vulnerabilities from a human perspective, and it makes it very hard to detect. So those are some of the things I would say pressing, and then around the corner, you'll see things that are emerging around deepfakes and things of that nature, but we'll talk. But those are, at least in a concise manner, what we're dealing with on a daily basis.
Yeah, I would agree with you that scams is really a hard problem for us to deal with as well, because you actually don't know whether that person is who they say they are at all. And even if they are, they likely could be who they say they are, but acting on behalf of someone else. So it's really hard when you start to think about, how do I prove that this person is doing something that they intend to do or want to do on their own? They're not under duress. And you can actually identify that as some type of trend inside of the financials, or what they're charging, or how they're charging, or where they're going.
That's right.
Yeah, I would agree with that. The scams are our biggest concern at Vantage. I think that, that includes CATO, account takeover fraud. We see a lot of folks that are in businesses that are falling victim to people stealing credentials, or using some fraud in some way to gain access to their accounts. And then going back to your point, making sure that we have the metrics and the information to determine if this is actually the customer doing the transaction, or is somebody doing it under duress or under false pretenses.
Yeah, it happens all the time.
Every time.
More than we'd like to admit, I think.
Exactly.
Yeah.
So data and analytics are obviously one sort of weapon that banks use, try to analyze all this activity and figure out what's legitimate, what's fraud. What are some of the things you are thinking about doing in this area? Are there new kinds of data, new kinds of analytics that can be brought to bear to more precisely identify what's sketchy and what's not?
For us, we typically are looking at, I like to describe it, what's old is new. You used to walk down the street and you would look at Joe, or you would look at Jane, and you would say, oh, I know Joe, or I know Jane. But in the digital world, you have to treat people in a very different way. You don't necessarily know them. So you have to try and collect the data assets that allows you to be able to understand who they are and why they're doing something in general. So that means, like, if I'm looking at credit card fraud, do they shop in a specific location? Are they far from their home? Have they put two credit card transactions at different places that hit two IP addresses within a very short period of time? And maybe it's not an authorized user on the account, or maybe it's something else that's happening. And then using that data to be able to create, as these guys will attest to, fraud scores or some other type of metric that allows you to be able to judge what's the relative risk to this credit card. If it's $2 and I'm paying for a toll as I'm going through the subway, is it that big of a deal? But if I'm buying a $1,500 MacBook, then maybe I need to stop and take a different track on that being outside of sort of this normal what I'm expecting from an individual. So a lot is about velocity, a lot is about transactions, and a lot is about consumer behavior.
Now, often a bank only sees so much. They see the accounts that this customer has with them. They might have a little bit of visibility into other things, but they're not seeing the accounts the person has elsewhere. They're also not seeing if somebody has stolen an identity, they're not seeing that they're using that identity at 6 other banks and a mortgage company and a telecom company. How can banks have better visibility into everything a person or a stolen identity is doing?